Hey, good evening. Dan here, stockmarketmentor.com, and let's look at Chewy. This is why. Company reported earnings after the bell. I'll get to that in just a second, but this stock had a really solid breakout here from a volatility squeeze. I didn't trade it, which was my bad. We first saw it move here. And the reason, look, sometimes weird stuff happens. The reason I didn't trade it is I was kind of preoccupied with something else. I saw that earnings were kind of right around the corner, and I'm going, I don't need it. I just don't have time to track it. And that turned out to be a mistake because the stock, well, it wasn't a mistake. The stock kept going though, but I made a decision. I got too many other things going on in my personal life. Can't make every trade. Sorry. And so anyway, so the stock went up nicely, and then here it was waiting for the earnings call. This is where it was pre-market right here. And then once the company reported earnings, you could see the stock scrambled all around. This is what the stock, let me catch up to present day here. Okay, this is what the stock looked like. Now, I happen to be noticing on CNBC, the Chiron, that Chewy, quote, tanks after reporting earnings, and it was down like 2.5% or something like that. Okay, fine. I wouldn't say a 2.5%. I think where did the thing close here? I'm not looking at this as really tanking, but I get it. So it's down a bit. But what's important to me is the stock is stabilizing here. From an actual results standpoint, I ain't going to get it into the numbers with you. That's not my deal. They lost money on in the first quarter, which was expected, but they didn't lose as much. And they actually they had good revenues. They actually beat what the estimates were, but the stock is still down. Here's my point. This is a stock that could give you a buying opportunity tomorrow. It's not the greatest. The greatest opportunity, frankly, was the one that I missed, the one that I passed up. I didn't get it. But I don't want to just say, okay, well, crap, I don't ever want to talk about that stock again. No, you keep charts of good companies on your watch list. You want to be tracking these. So from a kind of a longer term standpoint, I think it would be great if the stock would kind of drift around a little bit. But this is a weird market these days where day traders can grab onto these stocks and really start taking them for a ride. And so with Chewy, I would just say, watch this stock tomorrow. If it runs up above 53.60, okay, that's the post earnings high. If it runs up above 53.60, this stock can really start moving higher. If it doesn't, I wouldn't buy the stock. I'd only be buying the stock tomorrow if it moves to a new high. And here's why. Because if it doesn't, well, then there's obviously sales going on, and then you're going to want to wait a little bit and get a better entry on the stock. So anyway, that's how I would trade it. Members, pay attention to tonight's strategy session. I'm giving you a very, in my view, a unique way to look at charts in a way that's going to make you money in two ways. First of all, it's going to give you a better indication of what's going to happen. And second of all, it's going to keep you from making dumb trades that later you would look back on and say, what was I thinking when I made this trade? Seriously, it's going to help you out a lot. And if you're not a member, you need to fix that, okay?